3 months ago, Donald Trump won the US elections, triggering a 50% surge in Bitcoin's price. Investors believed his presidency, along with a wave of pro-crypto politicians in Congress, would spark a full-blown altcoin season. Hopes were high for new Bitcoin reserve approvals, a friendlier regulatory environment, and growing institutional interest. Many expected the real rally to begin after Trump's inauguration on January 20th, and indeed, Bitcoin reached a new all-time high. However, the much-anticipated Altseason, where altcoins skyrocket daily, never materialized. Instead, Trump's presidency ignited a trade war, inflation fears, and a local market correction. Concerns that this pullback could escalate into a full-fledged bear trend are only growing. The once dominant Altseason narrative has faded, replaced by a more pressing question: when will the market recover? Many investors are exhausted, some even selling at a loss, frustrated that their expectations weren't met. In today's video, we'll break down the current state of the crypto market, not just why prices are dropping but also why we ended up here in the first place. This video is divided into 2 parts. In the first, we'll explore the key factors suppressing the market, including Bitcoin's inability to break above $100,000 and why the post-Trump hype failed to deliver a true alt-season. In the second half, we'll analyze potential catalysts that could reignite a bullish trend and restore investor confidence. This video is packed with valuable insights, so make sure to support it with a like. Let's address why the market has been declining since the start of the year, with many altcoins testing new lows. A major factor is the macroeconomic landscape, particularly Trump's escalating trade war with China, Mexico, and Canada. This has driven up the US dollar index and increased inflation risks. His 25% tariffs on steel and aluminum have fueled economic uncertainty. Second, supply and demand imbalance. Bitcoin remains stuck between key levels, and Trump's policies are only adding to market volatility. Fears of rising inflation have led to speculation that the Federal Reserve may delay interest rate cuts or even raise rates further. Fed Chair Jerome Powell recently stated that the Fed isn't in a hurry to cut rates, a comment that negatively impacted Bitcoin. Higher interest rates make riskier assets like crypto less attractive, shifting investor focus towards safer options like bonds. This uncertainty has already triggered massive liquidations. Some weeks ago, the market saw over $2 billion in forced sell-offs. According to QCP Capital, Trump's tariffs have reignited trade tensions, leading to increased volatility. Bitcoin's implied volatility is now skewing toward put options through April, signaling weak bullish catalysts in the short term. Another reason Bitcoin is consolidating instead of rallying is the fading post-Trump hype. When Bitcoin ETFs were approved earlier last year, many expected a flood of institutional capital to push prices to unprecedented levels. BlackRock's Spot Bitcoin ETF, along with similar funds from Fidelity and ARK Invest, initially fueled optimism. However, inflows into these ETFs have been lower than anticipated, and the hype around them has subsided. Even Michael Saylor, one of Bitcoin's most vocal supporters, has acknowledged that while ETFs provide a solid foundation for long-term adoption, they aren't an instant catalyst for explosive growth. MicroStrategy continues accumulating Bitcoin aggressively, but the institutional frenzy many expected hasn't fully materialized, at least not yet. Bitcoin is currently in a consolidation phase, fluctuating between 2 key moving averages. On February 5th, it dropped below its 50-day simple moving average at $99,700 but found support at the 100-day SMA near $95,800. This suggests an ongoing tug-of-war between buyers and sellers. To break out, Bitcoin must reclaim the 50-day SMA and challenge resistance at $100,000. Losing the 100-day SMA could lead to a deeper correction. Looking at liquidation maps, large sell orders are clustered around the 50-day SMA, while buy positions sit slightly above the 100-day SMA. The big question is, how long will this consolidation last? Analysts predict that Bitcoin's price action will stabilize by late February. Despite trade war fears, Bitcoin's demand remains strong, repeatedly bouncing above $90,000. Glassnode's analysis of Bitcoin pullbacks in bull markets suggests that a second wave of euphoria could still emerge. In previous cycles, Bitcoin corrections averaged around 25%, followed by strong price acceleration. However, this cycle has yet to see that acceleration. One key metric to watch is the long-term versus short-term holder threshold, which tracks capital flow from experienced investors to new buyers. Market tops typically occur when long-term holders start selling to newcomers, but Glassnode data shows that this isn't happening yet. While over 1 million Bitcoin has moved from long-term holders to new buyers since November, veteran investors still control a significant portion of supply, suggesting they expect even higher prices ahead. Comparing the current cycle to past cycles shows strong similarities, though an exact repeat is unlikely. In 2017, Bitcoin's all-time high represented a 113x increase, while the next peak delivered lower but still massive gains. As Bitcoin matures, each cycle sees diminishing returns, requiring larger capital inflows to sustain new highs. So far, Bitcoin has risen sixfold from its December 2023 low of $16,000. Based on historical trends, analysts predict a final peak between $160,000 and $210,000. Now, let's talk about the altcoin market. Many investors expected the approval of Ethereum, Litecoin, and other altcoin ETFs to serve as a catalyst for a new alt season. However, these ETFs have not attracted the same level of institutional interest as Bitcoin ETFs. BlackRock and Fidelity have filed for Ethereum spot ETFs, but regulatory hurdles remain, and approval delays have dampened enthusiasm. Litecoin, often referred to as the silver to Bitcoin's gold, saw a brief surge in speculation following ETF discussions but has since retraced. The same applies to other major altcoins, including Solana and XRP and ADA, which have struggled to sustain upward momentum despite strong fundamentals. A major concern in the market is the rise of meme coins. Unlike Bitcoin or Ethereum, meme coins lack strong fundamentals and are often driven purely by speculation. While Doge and SHIB have historically performed well during bull runs, many newer meme coins are launching daily, creating an oversupply and increasing risk for investors. The collapse of several high-profile meme coins has also damaged sentiment, as traders become more cautious about short-term speculative plays, aligning with forecasts from firms like VanEck, Asset Management, and Bernstein. While some analytics suggest Bitcoin is in a consolidation phase, the real question is whether we'll see another major rally this year. Key catalysts include potential Federal Reserve rate cuts, renewed ETF inflows, and institutional accumulation. If these factors align, Bitcoin could break above $100,000 and set the stage for a broader crypto bull run. However, the risks remain. If macroeconomic uncertainty persists and ETF inflows remain weak, the market could enter a prolonged stagnation period. Investors should be cautious and prepared for both scenarios. As always, managing risk and staying informed are key to navigating this volatile market. The next few months will be crucial in determining whether this is just another consolidation phase before a final leg up, or the beginning of a deeper correction. Let's see how it plays out. Well, friends, that's all for today. Don't forget to subscribe to our channel to stay updated on new videos and share your opinion in the comments. Good luck, and until next time.